7 countries have simultaneously suspended all exports to the United States, sending shockwaves through global markets. This is not a warning. It's happening now, with immediate consequences for the U.S. economy. Empty shelves, stalled production, and price spikes are no longer distant threats. Tonight, I'm D, and we'll break down the facts, the official statements, and the real-world impact. We'll examine the actions of China, Mexico, Germany, Brazil, India, South Korea, and Japan, and contrast them with Canada's new trade deal. Let's dive into the details. China, the world's manufacturing giant, has halted all exports to the US. Not just tariffs, but a total shutdown. Overnight, over $500 billion in goods vanished from US shelves. Electronics, machinery, and consumer goods are suddenly in short supply. Supply chains built over decades are severed, leaving US businesses scrambling for alternatives. The scale of this disruption is unprecedented. The crisis has begun. Next, Mexico, a vital US trading partner, has suspended exports, shaking the North American manufacturing landscape. The USMCA, meant to ensure seamless trade, is now effectively dismantled. Last year, US-Mexico trade topped $600 billion, much of it in auto parts and vehicles. US automakers depend on Mexican factories for critical components. Without them, production lines in Michigan and beyond are grinding to a halt. Factory shutdowns and layoffs are imminent, threatening tens of thousands of American jobs. Mexico also supplies over 70% of US winter vegetables. Avocados, tomatoes, berries, and peppers are now at risk. Food shortages and price spikes are expected in grocery stores nationwide. Mexico's government cites a shift in economic priorities, but insiders say it's a coordinated response to US trade policies. Border crossings at Laredo and El Paso are nearly empty. Trucking companies face collapse. US investments in Mexican manufacturing are now in jeopardy, with plants unable to ship goods north. The entire cross-border trade ecosystem is paralyzed. This move, in sync with 6 other nations, marks a new level of international cooperation against US interests. The economic and logistical fallout is immediate and severe. The North American supply chain is broken. The US faces a costly, years-long process to rebuild or relocate production. The crisis deepens. Now to Germany, the EU's economic powerhouse. Germany's export suspension targets high-value industrial machinery, luxury vehicles, and pharmaceuticals. US factories rely on German precision equipment. These aren't easily replaced. Brands like BMW and Mercedes-Benz may halt US sales and production as advanced components are cut off. German medical devices and pharmaceuticals are also critical. Shortages could threaten public health. The German government cites long-standing trade disputes and a reassessment of transatlantic relations. By joining this coordinated action, Germany amplifies its message and increases pressure on the US. German exports to the US were worth over $110 billion last year. The US is especially vulnerable to the loss of these specialized goods. The broader US-EU trade relationship is now under extreme strain. For consumers, luxury cars may disappear, but the real impact is on the machinery and technology that power American industry. The suspension threatens the very capacity of the US to produce. This is a strategic strike at the heart of American manufacturing. The economic gamble is high stakes for both sides. Decades of cooperation are now at risk. The industrial engine sputters. From Europe to South America, Brazil, the agricultural giant, has joined the export suspension. Brazil's halt targets America's food supply and key commodities. The US is a top importer of Brazilian coffee, orange juice, sugar, and beef. Shortages and price hikes are inevitable. The National Coffee Association warns of a severe shortage. Your morning cup is at risk. Brazil also supplies iron ore and crude oil, vital for US industry and energy. The loss of Brazilian iron ore hits the US steel industry hard. Shipping routes between Brazil and US ports are disrupted, leaving tankers idle. US companies scramble for alternative sources, but options are limited. Brazil's decision is driven by environmental disputes, closer ties with China, and a push for economic independence. The move exposes America's vulnerability in food and raw materials. The global food system's interconnectedness is now a liability. U.S. breakfast tables and factory floors feel the impact. The agricultural blockade adds urgency to the crisis. The U.S. must now confront its dependence on foreign staples. The supply chain for basic necessities is broken. The crisis spreads. Now to India, whose export suspension hits U.S. technology and pharmaceuticals. India is a global leader in IT services and generic drug manufacturing. American corporations rely on Indian firms for software, customer support, and data processing. That support is now gone. Corporate IT projects stall, call centers go silent, and business operations are thrown into chaos. India supplies nearly 40% of U.S. generic prescription drugs. Pharmacies will soon run out of affordable medicines. Patients may face higher costs or go without critical medications. The U.S. healthcare system is dangerously dependent on Indian generics. India's move is part economic nationalism, part geopolitical maneuvering. The Make in India policy and ongoing trade disputes with the U.S. are key factors. The freeze also affects textiles, gems, and machinery, but tech and pharma are hit hardest. The U.S. must now rebuild service delivery models and secure new drug supplies. The risks of offshoring and outsourcing are now painfully clear. The knowledge and healthcare economies are just as vulnerable as manufacturing. The clock is ticking for American patients and businesses. The tech and pharma freeze is a wake-up call. The crisis accelerates. South Korea, a tech powerhouse, has joined the export suspension. Samsung, LG, and other giants supply the U.S. with electronics, memory chips, and displays. The halt creates a severe bottleneck. Smartphones, TVs, and appliances will disappear from shelves. Retailers face empty inventories and soaring prices. South Korean memory chips are essential for U.S. tech, auto, and industrial sectors. Without them, American production lines will stop. The auto sector is hit again. Hyundai, Kia, and EV battery supplies are cut off. The American EV market faces a major setback. South Korea's decision, despite its alliance with the U.S., reflects a new assertiveness in global trade. Underlying trade tensions and semiconductor disputes have come to a head. The move exposes the risks of concentrated supply chains in East Asia. U.S. efforts to onshore chip manufacturing are years away from making an impact. The electronics shutdown is immediate and severe. The U.S. tech sector is in crisis. The supply chain is broken. Finally, Japan, America's close ally, has joined the export ban. Japan's exports to the U.S. are high-value, high-tech, and hard to replace. The auto sector is hit. Toyota, Honda, and Nissan rely on Japanese components for U.S. production. Robotics and factory automation from Japan are essential for American manufacturing. The loss of robots, spare parts, and software could cripple automated factories. Japan also supplies specialized materials for semiconductors, defense, and aerospace. The suspension creates national security vulnerabilities. Japan's move signals deep dissatisfaction with the status quo and a push for new trade terms. Financial markets are stunned. $140 billion in annual exports are at stake. The coordinated action with 6 other nations forms a united front. The pillars of the U.S. import economy have been knocked out. The cumulative effect is a full-blown economic crisis. The U.S.-Japan alliance is under strain. The precision strike is complete. Tonight, we've witnessed a historic economic shock. 7 nations have severed critical supply lines, creating a coordinated disruption of the U.S. economy. Shortages, inflation, and industrial paralysis are immediate. The long-term consequences are even more profound. Canada's new trade deal only highlights America's growing isolation. The era of cheap, stable global trade may be over. The U.S. must now rethink its place in the world economy and how to rebuild. The question: how will America respond to this unprecedented challenge?